Well, all right, everyone, let's get going. Today is it Wednesday? Holy smokes, eh? It's Wednesday, February 24th, 2016. This is your daily Forex trading strategy session. As you can see, there are some trading ideas already on Forex.Today. Any news coming up? Wednesday, we have oil inventories. Fine. A lot of central bankers speaking today. That could move the market. New home sales should be good. It's going to be a very good summer. How do I know that? Did you guys track Home Depot and Lowe's earnings? They're doing very well. So consumers are not really out spending a whole lot on things like clothes, but they are spending money on houses, which means they're getting them ready to sell this summer, huh? So I think it's going to be a good summer. But anyways, so new home sales at a 10, and then we're going to have some PMI stuff. All right, cool. Not a super heavy calendar, but that means nothing's going to get in our way of our success. So let's get going, huh? So, guten Morgen. Let me remind you that trading is risky, not appropriate for everyone. The past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives you access to not just the Forex market, but also energies, metals, stock indices, and all those things wonderful. The complete toolkit for you to trade and be successful with. These sessions held at Forex.Today are every Monday through Thursday at 7:30 in the morning, and then every Friday at FXStreet.com. Hope to see you there. Okay, so what's on your mind? Did you trade Asia? Let me take you back through Asia. Let's do Pig Dog or Beast. So it all started in the Asian session, actually. Let me get this off the 1 minute. Oh, look what somebody was doing. How interesting, huh? So this big move here, actually no, this big move here happened just as we were breaking 140 on the pound dollar. Isn't that loufle? Pound dollar breaking 14000 to get to a new low, going back all the way to the early 1990s, I think it was. And then we're getting closer and closer to getting down to a low printed in the 1980s. 1980s. So pretty historical stuff. So anyways, while the pound dollar was breaking that psych level, look what was set up here. Now, first of all, this dropped from 25 down to 35, is 90 something pips. That was closer to 80, but okay, it only moved 80 pips. But this is pound yen. It's interesting how pound dollar was breaking through that psych level, right? Down, 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 down. 786, roll reversal at a 15-minute 21. Sell, sell, sell. Isn't that nice? Isn't that pretty? So in this case, it fell to it. And it fell down to 56,000. That's it. What do you think of that, guys? Yeah, cha-ching. And then Europe wakes up, tries to crush everybody. So it goes from 56 back to 57, then 57 down to 56, down to 55. So let me get this straight. Here's what happened today. All right, down 100 pips, back down another 100 pips, up 100 pips, down 200 pips. Is that it? Yeah, but besides that, nothing really happened. Have you guys practiced your putting? Joe got at 56. All right. So you got in here. All right, not my favorite place in the world, but all right. Right, the only scenario I can see that is the break below, the retrace and down, but it's a weird time of day. Unless, you know, if that was your only trade. If it wasn't your only trade, then cool. Then you just kept that one and let it run. Yeah. See, my only problem with this is it's support, right? So if it's after the break, fine. So it really depends on how you traded it. Yeah. But like pre-London would be a better, you know, where's my drawing tool? Let's speak English here. We all speak the language of technical analysis, right? So there's a couple of things going on here. As my drawing tool loads, okay. This is the Tokyo Open. Okay. This is the London Open. This is the New York Open. Everything else is just sort of a weird time of day. Okay. This is the Shanghai Open. Le fletulum. Right? 8 o'clock in the evening, New York time, 9:30 in the evening, New York time. This is Tokyo Open, this is Shanghai Open, right? These things occur for a reason. Why do these things occur like this right at Japan, right at the Tokyo Open, right at the Shanghai Open? Why does it happen? Ryan says stock market opens. Okay, but you know, Singapore opened in there, Taiwan opened in there, right? The money I'm looking for is banks. This is the answer I'm looking for is banks. Banks come online. Banks are way bigger than trading. They're moving money around. So they flip the switch, the bank opens. Boom. Okay. Flip the switch, banks open. Boom. Flip the switch, banks open. Boom. Right? So anyways, we're getting ready for the New York morning, but you notice if you pay attention, some of these moves start to happen when markets open, right? So it could do this today. Isn't that neat? Remember, the two most underutilized tools are clocks and calendars. Okay. So anyway, so that's what I'm saying here. If you sold here, you did the right thing technically, because this is a breakout type trade, right? Break below the old support, wait for the retracement, sell. That's perfect with the little cycle level there. It's a weird time of day. It's pretty late. It's after the major move, so on and so forth. But if it was a second or third or fifth trade, okay, cool. Okay, that's all. If it's your only trade of the day, it's a weird time of the day. But maybe, your job got in the way or something. Whatever. But, one of the things we've been working on is, you know, I spent maybe 6 months teaching you guys swing trades, and now I'm focusing on shorter term trades where you could, let's say quick 25 pips, quick 50 pips. And obviously, when you look at it on the hourly chart, you could see some beautiful swings in there, right? And do you see what reversed the market at the London Open? Okay. This should be the primary focus of your technical analysis. That's the hourly chart. Notice how if you go to the 15-minute chart, it started there on the lower time frame in Asia. Okay. Okay. I shorted there at 97. Why? Right? Psych level. So, sorry, psych. Wow. Sorry about that. Psych, fib, roll reversal. Okay, good enough, right? I think there was another reason in there as well. Oh yeah, 21. That's the whole point, right? So I shorted, it came up, it hit like 02, came back down, I was in at 97, boom, 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 boom. Okay. And then this chart dies. And very often I think this way, whether I'm combining the 1 minute with the 5 minute, the 5 minute with the 15 to the hour, but I'm very often trying to time things between the two charts. For example, what do you do when the 1 hour stochastic says up, but the 4 hour stochastic says down? It's an important question, isn't it? Wait? Well, waiting doesn't make you rich. Waiting doesn't pay the bills. What it tells me is I should be short-term long, but long-term short. So put up and swing down. Okay? Put up or swing down. But more importantly, I'm paying attention to multiple time frames where I say, all right, well, it's going to go up for a while. And then when this hourly oscillator gets closer to the overbought scenario, then I'm going to look for a long-term long. I'm going to start looking for resistance. I'm going to look for 15-minute cycles and 5-minute reversal patterns, and then I'm going to take a long shot. Well, a short shot, but longer term. Okay? And in this case, think about traders on a 15-minute chart that did all this stuff. They were riding the 21 down, right? But if you swing over to the hourly chart, it's simply their opportunity for the day to sell their 21. Because remember, their trade plan was they sold up here yesterday, and they took profit here, and they want to sell at the 21 again. That's all they did. That was it. That's it. That's it. That's it. That's all that happened today. Which is strange, right? Because you're like, man, I've been trading this for the last 9 hours, and it's been up and down and up and down and down and down and down, and then quick up and down and down and down and down. And you're like, what do you mean that's all that happened? Well, that's all that happened, right? You could have sold here at the 21, and you could have sold here at the 21 and walked away, right? That's why we have these moving averages here. Okay, that's like your cloud. Okay. On the 4-hour, what's happening? The test of the 21 was last week. And now all we're doing is riding the 5, ride 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 the 5, right? Ride the 5. It's the only thing going on now. Oops. Is that cool? So it makes you wonder what kind of idiot would be buying this. But you can see here, this is probably profit taking. This is probably profit taking. This is probably profit taking. You know, this stuff here is profit taking. You know, notice how a lot of these things are happening at pivot points, right? Then you get through the pivot point, there's no green candle at all. Le fletulum. Okay, this is a 4-hour chart too, isn't it? Doesn't this look calm and peaceful to you? Yes, Brian. The orange one's a 21. The blue one is a 55. And together they measure the speed and direction of the overall market. So when I look at this chart, I say, oh, it's bearish. And they say, well, what do you base your opinion on? Oh, I don't have an opinion. The 21 dropped below the 55, so by definition, the market is bearish. End of discussion. On this time frame, right? Cool. Now, the red and black line, that is a 5 EMA and an 8 SMA. But if you used an 8 EMA, it wouldn't kill you. Especially on a 4-hour. I mean, what the difference would be a rounding error. Okay? So what this tells me is I need to be a bear. And in simplest terms, every time the 5/8 crosses down, like here, and here, and here, and here, I should be short. Conversely, when it crosses up, I should take profit. Take profit, take profit, take profit, and I'm still letting it run. Right? And this is like straight out of the book that I wrote 1,000 years ago. Absolutely straight out of the book. Nothing's changed. Easy peasy lemon squeezy. Cool, right? And so what's the big idea here? Well, the 21 and 55 represents the overall market. And this is a generalized idea of, hey, what did the markets do today? What's the market doing? Right? When someone says, hey, how's the pound doing? You don't say, well, it was down for 2 hours and up for 2 hours and down for 3 hours and then sideways for a bit and then it went back up to the moving average and then it consolidated because of the pivot and then it went. And they're like, dude, what's going on, man? I just needed a quick answer. What's the pound doing? Oh, well, in the medium term, it's very bearish. Okay, 21 is below the 55, done. So once you've made this idea that the market is bearish, you know, a smart trader would want to sell. When do you want to sell? When price is overbought at resistance and wanting to fall. Okay, here's the resistance. Here's the resistance, right? Here's the resistance. And most ideally, it's situations like this, actually. So again, if you're reading Strategic and Tactical Forex Trading that I wrote in 2008 or something, I mean, I don't know how many years ago is that. That's a lot, right? What is that? 8 years ago, right? then the standard operating procedure on this time frame would be to sell here. This is the easy one. This is the money that should be in the bank. This is the one that puts your kids through college, this kind of stuff, right? And the rest requires a little more skill and finesse. Okay? So everyone got that trade, right? Right? Everyone sold at 65 and you now have 1,000 pips. Oh, but he had to wait a whole week for those 1,000 pips though. Ryan asks about a breakout strategy. What do you do while you wait? Or, yeah, I do wait. Okay. So if, let me draw this, I guess. If the market drops like this and then consolidates, what do you do? What I typically do is I trap it. Okay, like this. And I wait. Okay. And if it does this, I wait. And then if it does this, I sell. Okay. And I'm going to have a bias that the trend's going to continue because by and large, I'm a trend trader. But, it can do stuff like this. And then I'll say, aha. Okay. But I'm selling the pullbacks, right? Let me change the color here. The first part of the move is the breakout, right? Which I drew with this circle. But where I'm buying is here. Where I'm selling is here, not the breakout, the retracement. Right? That way you can be slow as molasses on a cold Georgia morning, right? Uh-huh. I like the way you trade. Mm-hmm. And you could still catch the pullback. You don't have to be smarter than the rest of the market. Say, oh, I should sell here or buy there. Well, how the heck would you know that, right? So that's how I trade a breakout. Second chance. Nothing wrong with that. So anyways, there's the pig. How does that make you feel emotionally, guys, when it moves 1,000 pips without you? Look at how beautiful that role reversal is. Lahoo, sir. Come on, guys. Does it motivate you to double down in your analysis? I mean, that's really the hope. I mean, that's pretty clear, right? That setup. Is the setup clear? Like the very, 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 very basic thing that I teach you, and we do it even on the 1 minute and the 5 minute chart, right? Lower low, lower high, you sell. What do we call that? What's the secret word? Hammock. Thank you, George. What do you mean, donkey? Yeah, hammock, and this goes from an old speech long ago, but there is a secret word for it. But I'm just trying to say that it is standard operating procedure that you should be doing this all day, every day on all your time frames, whether it's a 5 minute or a 4 hour, as they say in Georgia, it don't matter none. Now get in the truck. Oh, look at the sunshine. Hallelujah. Wow, I feel like I just had a major breakthrough. God, I see sunshine. It's going to be a good day, I can tell. I don't see the sunshine very often. All right. Here we go, Ambassador. On this time frame, and again, I will behave exactly the same way on a 5-minute chart, guys. I'm going to look at this and I'm going to drag this across because we've identified that price is currently made a lower low. Okay? That's it, right? Once you've made a low lower than the previous low, you say lower low, and I mark this. So you guys see me do this all the time. I mark this, and in the future, price will probably come back. We'll probably come back to this area. Will it be this week? Maybe. It might be Friday. And then I'm going to look to do this. Okay? The, while that happens, I'm going to watch this. Okay? If I were a gambling man, my guess is it's going to come up here, it's going to come down, it's going to hit the 55, okay? And then it's going to reload off some new news next week. Okay? That's pretty specific price action, huh? I know. That's how I roll. Okay, so whatever. You can apply that to anything. Kiwi yen. Hallelujah. Okay, you ready? Let's go in here. Let's zoom in. Old analysis. Boy, that's hard for you to see. I think you can see this. I know it's hard to see, but bear with me. Can you see this? Down, back to the 21, down. So it was as high, I mean, it was way up here, then it was right down there. But anyways, right? So it was 76 and then it dropped to 73, but it took 2 days to do it. Okay? But it started at the daily 21. Let's try CAD yen. Let's go to the daily chart. You see? Daily 21. Down, 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 down. So it's 3 currency pairs that did the same thing. How about Aussie yen? Now this is the one I exited because of the daily 21. And remember, I hedged it twice because of the daily 21. Right? You guys remember all this? Check that out, huh? Isn't that loufle? Right? I exited because of that. Right? You can see second chance, second chance. I'm very worried because I was long. Remember, I bought here and I was hoping for this. But again, hope's not a strategy. So I shorted this to hedge. I shorted this to hedge. But eventually I had to get out because it looked like the 21 was taking control. So total package here was 300 pips, 200 up, 100 down. But look, it seems to be continuing down because of the daily 21. So that's, we had a pound yen short a Kiwi yen short, a CAD yen short, an Aussie yen short. Holy smokes, eh? Denise wants to, oh yeah, oh yeah. Am I going to Dubai or what? Anise, man. I'm building a website to do that, but maybe I'll move it to May or something. I kind of want to go now. Got some business to do out there. But anyways, Anise asks, possibility of Bank of Japan intervention. Well, they don't like a strong yen, that's for sure. You know what? I went to bed last night in the Asian session and we were at 111.90. Guess where we are now? 111.90. Are they going to intervene? I don't know. It seems like other Asian economies might actually be buying the Japanese yen. Did you guys see the JGB again? The 10-year hit negative again. Isn't that amazing? The 10-year, not the 30-day, the 10-year is negative in Japan. There's somebody's buying a lot of Japanese government bonds. I was thinking it was probably China, right? We talked about that yesterday. Weaken the Chinese currency, strengthen the Japanese currency, and you got yourself a perfect little currency war. Japan doesn't have any money. China has too much money. Perfect, right? But okay, what about the intervention? I don't know if it'd do any good. I don't know if there's political support for it. Typically, you need a real meeting to announce it. Um, I don't know. But how do you make money in this environment, guys? Let's say you're, I don't know, a hedge fund manager, or you're a bank and you're trading in the fixed income department, right? Because uh, current, right? You probably, if you worked at a bank, you'd be in the FICC department, right? Fixed income, currency, and commodities. So you're a Forex trader, but your boss is a bond trader, and your boss's boss is a bond trader, and the assistant of the department, the assistant senior trader or whatever, is a bond trader, and you're just a currency Yahoo. That, right? Welcome to the real world. All right, currency Yahoo. They're all they go to meetings and all they talk about flattening yield curves and stuff. What do these guys buy when 10-year treasuries in Japan are negative? And what the 5-year German Bund is negative now too, isn't it? So what do you buy that doesn't have the currency risk? Right, I mean the yield risk, right? And also, would you be worried about buying currencies when you could have like Japan come in and just weaken your position? Just boom, you lost $1 billion because of the Bank of Japan. Trust me, I know what that feels like with Swiss National Bank. Boo, did nothing wrong. So what do you do if you think that's a risk? What do you buy, guys? What doesn't have yield risk? What doesn't have central bank intervention risk? Yeah, gold. You got it. Yeah, Jimmy, we can do Kiwi Swiss franc. I was pushing that a few months ago. Then we can go back in there. So, anyways, I don't know about planning on intervention. Uh, One thing I can tell you though, I have seen intervention many times in my life, and it always fails. That's the beauty. If they want to give me free money, bring it on, girlfriend. All right, where is it on this platform? Do I even have it on this platform? Hallelujah. Kiwi Swiss. There it is. Okay. Well, I don't know about that, donkey. What do you mean, donkey? I don't know about that, but I can tell you all the textbooks are wrong in university, and everything needs to be changed. Might be a great, you know, a great time for me to do a PhD. I think everything's wrong that they're teaching. Okay, so let's do Swissy here. Du, 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 du. Okay, how does that look? Then typically what I do is I do horizontal stuff. Okay, I'm not a big fan of channels, but they're interesting. Okay, let me go back here. They're interesting in with a couple of different concepts, but let me finish with my horizontal stuff. Right, I just can't go through the day without doing my support and resistance analysis, right? Gotta do my work, guys. All right. All right, that seems pretty reasonable to me. All right, let me zoom back in. This says down off of this as a top. Assumption is down to here. Most likely it's going to go, and then it will respect this level. This will come down, and then this will go up. Okay? It's too far to tell whether it will break down, and probably not if it's trying to trend. Okay? But it's been a long time since we had a higher high. So it looks like this is kind of in play. I'll leave it there. It's a pretty mediocre area of support. Oh, I've lost my mouse. Here it is. It's a pretty mediocre line of support here, which means if we're down here again, it's been a long time since we've made a high, right? And that now we have to mark this as the resistance. And honestly, though, oops, it seems to me more like this on the short run. So we need some sort of risk off mood. What's going to happen in March to create a risk off mood? IMF, FOMC, Euro. Mm-hmm. Artem got it. Japanese yen remittance. High five, Artem. High five. Yeah, funds are likely to flow to Japan. Fiscal year end coming up April 1st. Japanese yen strength. Bloomberg and CNBC are going to freak out that it's the Chinese stock market crashing, or yeah, the IMF maybe not as good as some. I don't know. They're going to freak out and they're going to say, because of this, it's because of this, it's because of this. And well, it's just normal business. Okay, so the Japanese yen normally, especially in the beginning of March, so we could have just one of these for a bit, and then more likely kind of stay in this range, maybe the upper end of the range, but stay in this range throughout summer. I know that's a long time. Okay. But I'll tell you, whoever asked the question, I had to zoom back. Well, whoever's in these trades, carry trade wise, this is actually probably what you really want, even though that doesn't feel good to you, and I don't know your entry points and stuff. But if you can stay in, or if you can, you know, if you get knocked out here, but you end up buying again here and here, um, this is the actual type of movement you want in a carry trade. You don't want it to go down, obviously, but if it's going to go up, very slow is ideal. In fact, as long as you remain profitable and this thing moves sideways, you're going to get paid. You don't want to carry trade like a pound yen. So I'll tell you what, pound yen does things like this, right? And then and two challenges are posed to a carry trade like that. One, the amount of pips you're making dwarfs the pathetic little interest you're collecting. You understand? So every time it does one of these, you make a year's worth of interest. And you start to realize that you're like, man, I'm in this as a carry trade, but I could get out now and have more money than as if I stayed in it all year, right? And then also because it's so overbought at some point, it crashes because that's what happens to carry trades. And you give that back, and meanwhile you criticize yourself for not getting out up here, and the whole time you're nervous. I need to get out. I need to get out. I need to get out. And it's not a. It might be a position trade, and in that case, you're in it for the pips, or a swing trade, you're in it for the pips. It's not a really good carry trade. But you want a good carry trade? New Zealand dollar versus the Swiss franc moving sideways for a year. Not enough pips to justify getting out, not losing any money, collecting a yield. Could be worse, could be better, but it's a carry. Okay? And that's really ideal. So I'm thinking we're going to get one more risk off month, like maybe like March. And let's say the Fed doesn't act, the euro, the ECB talks about acting, but they don't do it until either June or October, and so on and so forth, right? Bank of Japan does nothing. That's kind of what I'm thinking. But I don't believe like big crashes in the United States, big crashes in oil. No, if anything, it's just one more move and then sideways for 6 or 7 or 8 months. Okay, which is fine. We'll make money. Don't worry about it. It happens almost every year. Okay, it's one reason I'm teaching you to shoot at rabbits. But I don't want you to get used to rabbit stew, but just the season, right? Brexit is the only game in town? I don't know about that yet. But, let's see if I can find my old pound setup. But we've been selling this now for over a year. And if people are just figuring it out now, I feel sad for them. Right? Where is it? It's not here. It's on the other one. Maybe it scan pound. Do you guys remember it though? On the daily chart? The fib retracement and everything? I don't remember. I mean, we had this lined up last summer. My target was 34, I think. I don't know. I don't know where it was. Pound. Right there. Oops. Maybe it's in here. 1.5. I think it was even like 1.6. 1.62, I think. Right, 1.618. Something like that. Is it this one? I don't know where it is anymore. It's too bad. We used to look at it at least once a week. Where else would this pig be? Could be this one. It's sort of this one. All right. It's sort of this one. Okay. Here's the drop. Here's the 50% retracement. All right. And here's the rollover in our channel. So, yeah, 159. Okay. And our target, however, is right in this zone. The conservative target is 137. The aggressive target is 130. I mean, we did this every day for weeks and weeks and weeks. We looked at this thing, right? So it's a 3,000 pip call. And the interesting thing is, if you're hanging with me, we were buyers in here and sellers in here, and we were months. This took months, guys. Like this one was the frustrating second move. Oops. I mean, I don't know. I don't know how long ago it was in your mind and all that kind of stuff. I remember frustration in this part, the second move. I was hoping that this was the move. And then, but then we did this one, we did this one, we did this one. I was concerned in this area here for a rally because at that time we were protecting 150 and we stayed there for a month and a half. And then we got the breakout, retracement, down, back, roll reversal, right? And all of a sudden, yeah, June. I mean, look at this, May and June of last year, and we're talking 136, but with the real challenge of getting through this cycle level of 150. But I mean, we did this. I swear to you, we looked at this pretty close to 100 times. There was a front run on the BOE, and okay, I don't remember that, but I even have it set up even better on a different chart. I just can't find it. It's beautiful stuff, though, right? Okay. So anyways, this is really, really old hat and almost boring, right? Where does the Grexit get involved? Here, maybe? Right? Back in January, maybe we started seriously talking about a Grexit, right? I mean, who cares at that point? We were talking about it here on the way up. We were talking about this in, 1 year ago, back in February and March. We were setting up the Fibonacci retracement to sell it. I mean, seriously, a year before anyone even heard of Grexit. So who cares about Grexit? That's just what the TV talks about. This was well in play, way before that. Mm. Am I saying Grexit instead of Brexit? I'm sorry. Sorry. I don't even care. All right. So there it is, right? I mean, again, guys, what did we talk about yesterday? Start with your long-term technical analysis. Develop a bias. Are you a bull or a bear? And trade it. So when I think of pound, I have this burned in my brain, this chart, right? What guides you? How do you cross an open sea without the stars guiding you? If you tried that, you would just sail in circles and circles and circles and circles and circles until you run out of food and water. Okay? So you need a guiding principle, guys. What we talked about in January was a marketable idea. Does anyone actually follow up on this stuff? I don't think so. But yeah, you should have a marketable idea. What are your thoughts on the Great British Pound? Well, I have it going down to 134 based on the 50% Fibonacci retracement we had on the previous move, right? Going back to June 2014. Look, the top of the market was June 2014. Top of the market, June 2015. You know, it'd be sweet. It'd be totally sweet. March, April, May, right? And then June. Wouldn't that be sweet? Right? I mean, check it out, right? June 2014. March, April, July is here, May is here, so right in the middle. June 2015. Wouldn't it be cool if we had a retracement between now and June 1st, and then we dump it? Oh, snap. That's some analysis. That's called alpha. That's my alpha, baby. If you make any money, you owe me 30%. So Ryan says the meeting's 4 months away, right? The referendum in June. Isn't that a coincidence? Yeah, so we need to pay attention to this. Where are the key reversal areas? And, will we have an opportunity to look for that? We could go pound dollar. Man, I keep forgetting I did this one time. Pound dollar and CAD. Huh? Monthly support aisles. What if? Is this pig dog? What if? Ooh, we still got to get to 36. Look at that. The predicted bottom for the month is 38, guys. So if this gets somewhere between 37 and 38, we start to look for a buy. Holy smokes. Don't tell anybody though. Shh. Don't tell anybody. Okay. So it'd be interesting if we do find ourselves down here. And what would the plan be? Buy at support and sell in June. So you would write this down on a piece of paper, you would set alarms, you would mark up your charts, you would print them out, you'd post them on your wall, you would talk to your mom and dad, and you would be prepared. So Stephen says, tell everyone, let it feed the fire. I've been speaking publicly about how to trade Forex conservatively with discipline. And right. And I speak publicly all over the world, live or in webinars. I've met people from probably 100 different countries. Nobody listens to me. My kids barely listen to me. And I have to yell at them. Pick up your wet towel after you shower for the 900th time. Pick up your school bag. Why are your shoes on the floor? Look, nobody listens to me. So don't worry about it. I'm just saying save your breath. But be prepared, okay? And by the time you're long and strong with your stop at break even, um, then you'll hear CNBC and Bloomberg and Wall Street Journal, Investor Business Daily, Financial Times, The Economist, all freaking out about the referendum, the referendum, the referendum, the referendum, and you'll be just making money hand over fist because you were in a month and a half before anyone else even thought about it. It's not complete rebalancing, Kareem, but also it's not all an equity issue either. But yes, that is a big part of what's going on because we are in a changing world where everything was going up on quantitative easing, let's say in the United States. And now we don't have quantitative easing. So you had firms that were making money simply because all ships were rising. And now we're changing into an environment where stock pickers actually have to pick good stocks. They have to be in the right industry for the right reason, and they have to do the right analysis to pick the right stocks, winners versus losers. And that's how they're going to make their money. And there's going to be a divergence in performance. A lot of people are going to lose some money. A lot of people are going to make some money. Money's going to move around. There's a difference between how much equity you should be holding and what type of stocks you should be holding, whether they're defensive, whether they're playing against the market, defensive against flat yields. What kinds of bonds are you holding? Maybe you used to be in junk bonds because you couldn't get a yield, but now junk bonds are crashing because of the expected increase in interest rates. So you got to get it out of that sector. So now you're in cash, and where are you going to put the cash? Well, the stock market is overbought. Valuations relative to performance are too high, so you can't really afford anything. You're worried about foreign exchange. The commodities are down, so what are you buying? And we're in this spot. We're in this spot where it's not easy. So where do you put your money is a big question. So is it going to happen? Are we going to get answers quickly? No. Are my screens? They're 22s. I've had these screens for, I don't know, 7 years or something. They're really old. Well, so Ryan says that's what will make us good traders. Well, that is the point, because people will need you. Okay? What makes a wealth or individual want to invest into an alternative asset manager like yourself? That they're pretty upset with the standard asset classes. They expect the stock market to be flat or down. They expect yields to be low. Right? They don't know what to buy. They need some advice. They need some help. So maybe hedge funds are a better alternative moving forward if the stock market's going to be flat or maybe a little bit up by the end of the year, right? If yields are low, which means bond prices are too high, what are you going to do? Short the bond market? What's going to be the major catalyst for that? If commodities are down, you need advice. Is this the bottom? Do you understand? Oil drops or rises 10% a day now. Have you thought about that? It moves from 30 to 33. That's 10% a day. Holy smokes. So they need brains. And luckily, I have the body and face of a supermodel. That's just been luck. But I've also been given brains, which is pretty good. It's a nice combo. It's a nice combo. But I'm Canadian, I can't help it. It's just how it is. So there's hope for us, guys. If you do your homework, people are willing to pay you a hell of a lot of money. And let me tell you, there's more money in this world than you could imagine. Okay? So the world needs you. Why don't you be a Superman and help me save the world? Right? 30% at a time. Oh, I'll save you for 30% of the cut. So you want some gold? Sure. Okay. So what does this say? It says, I'm worried about my money in London. I'm worried about my money in Frankfurt. I'm worried about my money in New York. I'm worried about my money in Singapore or Hong Kong. I'm worried, I'm worried, I'm worried. Right? Negative interest rates. What do you do if you got $1 billion parked in a bank that's charging you money? Right? You're losing a couple of $100,000 a month. Right? You're losing $10,000 a day, 7 days a week. Maybe buy some gold. At the end of the day, you can brag to your shake buddies and say, "Oh, well, you only have 1 ton of gold? I have 1.25 tons, bro." So gold's moving anyways. It's not an inflation play per se. It's not even really let's say, industrial demand issue. It is a demand issue in the sense that people want to buy it, but it's just sort of in vogue because the choices right now are pretty lame. Now, I also want to remind you, a year ago, I was talking about there was no reason to own gold. No one in the world wanted to buy gold. And I said the world wants to protect $1,000 an ounce. And I said for no other reason than it's psychological. And there are a lot of people holding gold that just don't want to see it go down to 650 again. And that the last time actually we made a trade on gold was to sell 1380. That was the last call I made. But the target was somewhere between 1,100 and 1,000. I said no one wants it to touch 1,000. So as we get closer and closer to 1,000, people are going to buy it simply because it's 1,000. Does anyone remember that? I must have said it again, maybe 100 times, but is that a fact, or am I trying to backfill or something like that? Because it's the logic that I want to cross, right or wrong. I don't know if I'm going to be right or wrong, but what I share with you every day is my thought process, right? It's a thought process that I'm sharing, not trade signals and stuff. And I'm just trying to, like, from my experience of the market and the education and commodities that I've had, and just even talking to people around the world. I've sat down with people in the Middle East that are supremely worried about gold prices. So that was the discussion back in 2014, 2015, that kind of stuff. And ultimately, we got down to 10.5 right there, right? 1050. It was basically the bottom, right? And what's changed since, here and here is negative interest rates. Okay? That's the change. Nothing else in here changed, right? No reason to own gold, 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 negative interest rates, woo. So it does matter because you have to do something with your money, right? What are you going to do? Put your $1 billion in Frankfurt and the ECB comes out and devalues the currency in which your money is held? You see what I mean? What do? You put it in London? Pound drops another 5%? How'd you like to lose 5% of your net worth? No, thank you. So on and so forth. You got to go through this process. Where do you put your money? Where do you put your money? Where do you put? I was actually asked that the other day. Well, it was actually last month, but I was asked if I was given 10 million US dollars, where would I put it if it couldn't be US dollars? Yeah, for how long? Nice, good question. So I said, well, why don't you give me $10 million and you'll find out. We'll all be surprised because I don't have any plans. I just sort of sit down at my screen and kind of go for it. I kind of just trade on the seat of my pants. I kind of open up the charts, and if I see red, I start selling. And I don't know. I kind of just make it up as I go, but I'm really nimble. I have a really high win-reward ratio. I win 90% of the time. My winners are 2 pips. My losers are 90 pips. And I break even at the end of the year. But what a hell of a ride I'll give you. At least you'll break even. It'll be awesome. It'll be great. You'll love it. So anyways, that's Donkey's book. Well, you know, the funny thing is, as sarcastic as I can be, it's funny as hell, but it's painful at the same time, right? So if it sounds absurd, you know, the absurdity of it is, why don't people change? Right? I mean, seriously, let's get all serious here right at the end. Why don't you just freak out and just pick up your chair and throw it against the wall and kick something? As long as it's not a sentient being, okay? And say, I am changing. Today is it. That's it. Everything I've done in Forex up to now, I'm throwing it out the window. And I'm going to change just for the sake of changing. I'm going to be strong. I'm going to be disciplined. I'm going to be focused. I'm going to spend 4 hours a day doing analysis and 15 minutes a day trading. I'm mastering this. That's it. This is a new day. This is a new world. I got to man up. I got to get serious. This is it. I'm not going to watch pound yen drop another 1,000 pips and cry. That's what I would do. I swear. I would freak out. But most people don't. They're just complacent. They're a frog in water with the stove on, and they're just sitting there like, oh, it's getting hot in here. It's getting hot, right? But I think I seriously would. I would do things just for the sake of changing. I would wear my watch on the opposite arm. I'd wear my wallet in the opposite pocket. I would drink tea instead of coffee. And I'm looking for change here because my old habits are mediocre at best. And I've proved it. I've tested it for years, over thousands of trades, and mediocrity is my peak. And it's no longer acceptable. And I'm going radical on this one. And that's how I act. I really do. I'm a strange bird. Because the world doesn't reward mediocrity, but I'll tell you what, society loves heroes. They'll make a hero out of you. And let me tell you, the rich people of the world need your help. They need you to help them stay rich, and maybe, which is even a second priority, get a little bit richer. But the rich people of the world need your help to stay rich. And if you can help them on this problem, they're willing to share. They need a hero. Will you be my hero to save the rich people of the world? Yeah. Then sleep on the opposite side of the bed. Say, move over, honey. That's my spot now. And she's, shut your mouth. Don't you talk to me that way. I'm sorry, ma'am. I just got so fired up. I was listening to Wayne. I don't know what got in me. So anyways, I love you, babe, but I got to jump. Peace on earth. May the pips be with you. May your profits be above average. It's Wednesday. Don't forget oil inventories. Canadian dollar is going to move today. And because tomorrow's Thursday, I'll be here tomorrow trading Forex. Hopefully a little bit richer. So peace on earth. May the pips be with you. May your profits be above average. And thank you for being on my team. I appreciate it.